Breaking update. Former U.S. President Donald Trump is once again shaking global markets, and this time, he's targeting foreign investors, including thousands of Australians, with a sweeping new tax proposal that's already sparking international controversy. In this must-watch moment, Trump's proposed policy aims to introduce a 5% surcharge on all foreign-owned assets held in U.S. corporations, increase capital gains taxes on non-citizen investors, and restrict the use of tax deferral strategies that Australian investors have relied on for years. This shocking twist could drastically change how Aussies invest in U.S. real estate, stocks, and retirement portfolios. Australian investors who own American property or shares in U.S. companies could be facing a significant rise in tax liabilities starting 2026, if Trump's plan is enacted during or after his potential return to the presidency. According to financial experts, this move is designed to boost domestic ownership of American assets, but it's being seen internationally as a warning sign for anyone holding cross-border wealth. Subscribe now to stay ahead of these fast-moving tax updates that could affect your financial future. Trump's plan also includes enhanced reporting requirements for foreign entities, meaning Australians using American LLCs or trusts may have to submit much more detailed tax disclosures. For retirees who have invested part of their superannuation through U.S. markets, the proposed capital gains rate hike from 15% to as high as 25% means diminished long-term returns. But the issue goes even deeper. Trump's policy suggests taxing unrealized gains annually for non-residents, a concept that's widely opposed, because it taxes income you haven't actually received. This must-watch moment is forcing wealth managers to reassess all U.S.-linked holdings. Legal analysts warn that many Aussies could be caught in the crosshairs unless they restructure their portfolios immediately. Subscribe if you need expert guidance on how to pivot your investment approach to safeguard your hard-earned wealth. Now let's talk numbers. Over 18,000 Australian investors hold direct U.S. property, and more than 120,000 have exposure through ETFs and managed funds that rely on American equities. With these new tax pressures, many are already considering shifting capital to Europe or Asia to avoid the Trump tax trap. The Trump campaign defends the move as part of an America First strategy to regain economic sovereignty and reduce foreign influence in domestic markets. However, this plan risks retaliatory tax changes from other countries including Australia, which could spark a broader trade or finance conflict. Financial planners are now recommending the setup of international trusts, strategic fund redirection, and immediate consultation with tax attorneys. Must-watch moment. There's also a controversial clause in Trump's proposal that aims to tax foreign-held crypto assets that are stored or transacted via American platforms, meaning even Bitcoin isn't safe from this crackdown. Already, global investment groups are warning clients to reduce exposure to U.S. domiciled financial instruments unless a plan is in place. Trump's policy, if approved by Congress, would mark the most aggressive foreign investor taxation law in modern U.S. history. If you're an Australian business owner operating in the US through partnerships or subsidiaries, this could also lead to more audits, stricter capital controls, and potential freezes on dividend distributions. Shocking twist. The Biden administration has criticized Trump's proposal, but surprisingly, some bipartisan support is emerging in the Senate, especially from those who want to use these taxes to fund infrastructure and reduce national debt. This gives the proposal more momentum than many expected. Wealth protection experts advise acting quickly, as even rumors of this tax are already affecting US dollar-based investment flows. Third, subscribe prompt. Hit that subscribe button now to ensure you're always informed on game-changing global finance updates. Let's also not forget the impact on Australian super funds that invest in US markets. While domestic law shields some of this exposure, any direct holding of American assets through SMSFs, self-managed super funds, could trigger higher taxes, new compliance risks, or even penalties if not disclosed properly. Investors are urged to speak to Australian financial advisors who specialize in cross-border taxation. Real estate investors are particularly at risk. Properties bought in states like California, Florida, and New York may face higher taxes during sale, property transfer, or even on rental income. This policy could also depress resale values for foreign owners, affecting long-term capital gains. Must-watch moment. For Australians holding dual citizenship or green cards, the stakes are even higher, as Trump's plan includes a review of worldwide income reporting rules that may increase your IRS exposure. In other words, your income in Australia might be taxed by the US if not managed properly. As pressure mounts globally, Australia's Federal Treasury is keeping a close eye on how these proposed laws could impact bilateral investment treaties and long-standing tax agreements with the US. The Australian Taxation Office has already issued a statement warning investors to prepare for multiple tax scenarios in case of policy implementation. Meanwhile, major banks in Sydney and Melbourne are offering new advisory services to wealthy clients exposed to US markets. Shocking twist. Some analysts believe this is only the beginning. If Trump returns to office, more protectionist policies may follow, targeting global capital flows and complicating traditional wealth management strategies. This isn't just about taxes, it's about control, influence, and reshaping international financial norms. Whether you're a first-time investor or a seasoned high-net-worth individual, these developments demand immediate attention. So protect your investments, talk to an expert, and most importantly, subscribe to our channel for real-time alerts, financial strategies, and detailed breakdowns of every change affecting Australian